What is going on, guys? Welcome back to the channel. Today, I'm wearing my hot sauce shirt because I have a very spicy take for you on what's going on in the markets and in the US economy right now. This is something that changes literally everything, and it's something that most people are on the sidelines not paying attention to because they're too busy working, they're too busy going to school, they're too busy Zooming, they're too busy getting their coffee. But if you're not paying attention to this, it's something that you are missing, and you're gonna miss a huge opportunity not only to make money, but to preserve your money that's sitting in the bank, losing value day by day. So stick around, you're gonna understand in just a few minutes. Okay, I think one thing that a lot of people are guilty of is zoning out whenever things get a little bit too technical. When we hear too much about money supply, Federal Reserve, printing of dollars, it's very boring, right? I agree, it is very boring, but I'm gonna break it down to you in a way that's a lot easier to digest and tell you exactly what it means. So just stick around for about a minute. This first thing is extremely easy to understand, and this is something so many people have not taken note of, and I'm surprised it's not bigger news. That is that in the last year, in 2020, we have printed over 18% of all US dollars in existence, just in 2020. That's about 1/5 of all the US dollars that have ever existed ever. The US dollar has been around for 49 years, coming up on 50 years soon. And in 1 year, we printed 1/5 of all the dollars that have ever existed. Take a look at this. Data from the Federal Reserve shows that a broad measure of the stock of dollars known as M2 money supply rose from $15.34 trillion at the start of the year to $18.72 trillion in September. That's where we're getting this number of 18% more supply of dollars, but this actually gets worse. Check this out. A narrower measure of money known as the monetary base, or M0, which is physical money and bank reserves at the Federal Reserve, rose from 3.44 trillion to 4.8 trillion in August, the latest available figures. That's a 28% jump. That's not even a full year. That's January to August, a 28% increase of total dollars. Now this ripples to everywhere, and everyone's just sitting on the sidelines going, who cares, whatever, nah, no one cares, right? This means so many different things. First off, it means that the dollars that you are holding are losing value. Sure, not tomorrow are you going to see the effect. Not tomorrow are you going to go to Costco and, bread's going to be $15 more. That's what I think a lot of people think when they hear inflation. They expect to see things immediately change, but it takes a while for these effects to really ripple. The problem is also the Federal Reserve and really so many different politicians will say over and over again, the CPI, the measure of inflation, has not increased at all. So really everyone's worried about inflation, but there's no inflation. We're at our regular 2% inflation. Now that's BS. Of course, the people who are printing the money don't want you to lose faith in the money, right? They don't want you to get scared and go buy other things to hedge against the value of the dollar dropping. Check this metric out. This is insane. There's something that's called the DXY Index chart. And what this is basically a measure of how much purchasing power the US dollar has. So basically how valuable the dollar is. You can literally watch this change just like a stock ticker, and you can see how much more or less valuable the dollar is. Now let's look at this chart. This is absolutely insane. Back in April, at our highest point, the DXY had 103 points of value, and then we saw it just drop and drop and drop. Of course, COVID, the crash, all that kind of stuff. But then we haven't seen it recover. Why? Because of those numbers we talked about earlier, where we've printed so much money, which has devalued the purchasing power, the value of each dollar that exists. You see it just go down and down and down and down. And then now we are at 90 points from 103 points. Now, if you're used to huge swings in values of stocks and crypto and stuff, like that's not that much, but this is the actual US dollar. It's insane. Just in the last few months, since November, it's lost 3 to 4 points. In the last couple of days, it's been losing value heavily. Now, when the DXY goes down, usually Bitcoin goes up because people are hedging against the fact that the value of the dollar looks to be going down further and further. And so they want to buy assets that will be able to basically preserve their value because those assets will go up. So they'll still have their purchasing power because they'll have more value stored in those assets, things like gold, silver, Bitcoin. All right, I think you guys already kind of see where I'm going with this, but give me one more second before I tie this all in together. There's something that's called the M1 money stock, and this is a reported number that basically shows it consists of currency outside of the US Treasury, Federal Reserve banks, and vaults depository institutions. It tracks how much money is out there, and recently they started adding savings deposits, so basically like what people are holding in their savings accounts, to the chart. So if you look at it, you see it's been steadily increasing throughout all the different years. You know, since 10 years ago, it's basically had this uptrend. And then just recently, from 2019 to 2020, and then especially as we've gotten closer to 2021, you see this huge spike. Now that spike is because they started tracking people's savings accounts too, so that's where the extra money came from. But even if you take that spike out, you just see this massive upwards movement of the line. Especially if you take away that big giant leap, it still is moving way faster than it ever was. And again, this is just another measure that there is more money than there has ever been printed, and inflation is coming, whether or not people want to admit that inflation is coming. So clearly, I've got a lot of energy about this. This is something that I think is very important. Now, what does this all mean for us? Well, everyone has to make their own decision, and nothing I say ever is, investment advice or financial advice. What I really want you to do is just to be more aware about what is going on. In my opinion, for someone who has income coming in, I think that it is important to have my money going into things that will preserve the buying power. So depending on what your risk profile is, that could be all very risky things. I would say a lot of people would consider cryptocurrencies and Bitcoin very risky, but also if you don't want to be as risky, you can do things like, precious metals like gold and silver. You can do basically like index or ETFs. You can do like the S&P 500 or the VOO Vanguard fund. Basically, in my opinion, I am trying to buy up as many assets as possible. Right now, we are seeing a huge drop in the stock market, in cryptos even, we're seeing some drops. And what's gonna happen, in my opinion, is as we continue to print, it's all going to flow into those assets, combined with the fact that even if prices continue to drop at any point, the Federal Reserve literally cannot handle having all assets just go into a bear market. So they're going to just print more and buy up those assets to give the illusion that the market is extremely healthy. So we have two things going for us: inflation, which is going to pump assets, but the Federal Reserve never letting off the gas of printing, because they really at this point have boxed themselves into a point where they cannot let things crash to a point that I think a lot of people are very scared of, that they think is going to happen. On top of this, we do know that the government is still talking about stimulus packages throughout the rest of the year. We know that they're talking about adding stimulus packages for unemployment, as well as just printing money and giving it out to different places, just like they currently have just passed again, giving out more stimulus checks to people. All this money does make its way back into the markets, because people who are getting those checks, like you and me, we're buying things. I mean, with my last stimulus check, I bought Bitcoin. I know loads of other people are doing that with the stock market. And when that comes again, people are going to do it again. And then the money that goes to big corporations and stuff, that money will also go into assets. A lot of companies will do, stock buybacks, where they're basically going to buy their own stock to give the illusion that their price is going up and give more value to their company. All this kind of stuff wraps in together. And in my opinion, it just spells one thing: inflation is coming. Whether or not you believe it's coming quickly, it is coming, and a lot of assets are going to appreciate. So there you have it. What you do with that information is completely up to you, but I just wanted to bring it to your attention and hopefully break it down in a way that made sense, in a layman's terms kind of a way. And in my opinion, I am going to be buying as much assets as possible, and especially if we see any sort of corrections, dips, or even crashes, depends on what your definition of a crash is, I will just be loading up more and more and more and more. If you guys are interested in buying cryptocurrencies or Bitcoin, you should absolutely check out Coinbase. That's the one that I use. I have a link for that below. If you you are interested in storing your cryptos in an interest-bearing account, use BlockFi. I also have a link for that. Basically, you get 6% back on the Bitcoin that you store with them every single year. If you're going to hold it in the long term, you might as well. It's what I do as well. And if you're someone who's interested in the stock market, I have a link for M1 Finance. It's more of a basic app, more of a basic broker where you can kind of just set it and forget it, especially if you really don't understand quite yet how to do individual stock picks, or you really aren't have enough time, or you're not really interested in actually looking up and researching stocks. You can basically just pick a pie chart on that website and auto invest whatever amount of money you want to auto invest every single month. And yeah, it'll just track whatever those pie charts are using or whatever those index funds or exchange traded funds are buying. Whew. I don't know if it's this hot sauce tank or if I just spoke really fast and had a lot of energy there, but I am hot and sweaty. I hope you guys enjoyed this episode. It got a little longer than I was expecting, but as you can tell, I'm very passionate about this. I want to see you guys make money, and really, even more than making money, I just want to see you preserve the wealth that you work so freaking hard for. And I think it's just crazy to me that money's being printed in a way that takes that value away from you, basically takes the time that you've put into your job or into whatever it is that you do to earn income away from you. And I think that is criminal. So I want you guys to be aware of what's going on. I hope you enjoyed this video. If you did, give it a big old thumbs up. Let me know what you thought in the comments below, and subscribe if you're not subscribed already. And I will see you guys in the very next video.